Advocate Busi M was working on a high-profile case involving financial fraud. She was on the verge of a significant breakthrough in her case when her office was broken into and some of the supporting legal documents were stolen. Apart from the damage to the strength of her case, she now has to face the fallout of her professional reputation being tarnished and a counter lawsuit against her on the basis of negligence. Where to from here for her? Welcome to episode 2 of Insuring Trust with Leppard, a podcast where we unpack the stories behind the Leppard underwriting team who make it their mission to protect your reputation. In this episode, we're talking about professional indemnity, the type of insurance that protects professionals and professional service providers in the event that a negligence claim is instituted against them. Professionals such as Advocate Busi, not her real name by the way, or medical practitioners, business owners, or even the owner of a shipping vessel, whose story we'll get to later. Joining us from the Leopard team today are Vanessa Kleber, Head of Professional Indemnity, and more recently, Head of Corporate Risks. Congratulations.
Thank you.
And Steve von Roretz, Chair of Leppard.
Thank you. Good morning.
Steve, from your perspective, why is professional indemnity insurance vital?
Yeah, big question, actually. Yeah. This may sound a little bit odd, but at the heart of a PI policy is professional emotion. A professional goes through all the elements of training, goes through a period of on-the-job experience, hearing and learning from industry leaders, and wants to help their clients with appropriate solutions. That's what they've set themselves up to do. But things can go wrong.
Yes.
And when they do, the client relationship breaks down. The professional is accused of negligence, of being incompetent. They're at fault. They don't know what they're doing. And it can break people.
Sure.
This can be devastating. In my career, I've seen this happen to professionals. A PI policy then becomes a critical support structure for the professional, giving assurance that the world is not about to end, that the sun is definitely going to come up the following day. And in our context, if there is no liability, the policy will defend the professional. In our language, the professional's reputation. That's our byline.
Yeah.
If there is a liability, the policy will pay and maintain, hopefully, the professional's reputation and preserve relationships and learning. It helps him continue in his practice. That's what he was trained to do. A PI policy, I think, is about ensuring that that professional emotion, and particularly the emotional part, is removed, and we deal with it and support him going forward.
And his business continues. Yeah.
And all his staff are there, and he has a practice going forward. If it doesn't work that way, that business can fold. And I've seen it in my past.
Vanessa, let's bring you in here.
Yes.
As Head of Professional Indemnity and Corporate Risks, you've had your fair share of protecting the reputations of professionals. What exactly does that role entail?
Okay, so I started out with Leopard approximately 6 years ago, and I started out heading up the PI team. But I naturally gravitated towards larger, more complex risks. And I believe I developed a flair for that over time. And I think from that, my role has morphed into my current role, which is quite multifaceted now and includes providing technical assistance to the PI team, including rating factors on PI risks and assisting with technical queries around covers and wordings. In terms of my more recent role as Head of Corporate Risks, this has involved ring-fencing all the larger, more complex risks on Leopard's books to ensure a more in-depth and focused approach.
All right, so let's go back to the example of Advocate Busi M. Her story could go one of two ways, with or without professional indemnity. What would the two scenarios look like for her?
Yes, absolutely. So without PI, Busi M would not only have to deal with the cost of restoring all the legal documentation, but also have to deal with the potential liability from third parties and all the legal ramifications flowing out of this theft as a result of time delays and postponements. With PI, Busi M would have access to our legal advisors to assist her during this process and defend her from legal liability claims from third parties affected as a result of this theft. Our policy would also assist with the cost of helping restore stolen documentation. So from that, you can certainly see it's worthwhile having PI to back you up in these instances.
I think this is a good spot to bring you back in, Steve. As chair of Leppard, given your number of years in the underwriting world, what sets Leppard's products apart, and why would a professional benefit from this type of cover?
Yeah, so a professional indemnity policy can be bought from all sorts of different places, and they principally do the same thing. I think what sets us apart is that we do approach matters very differently. It is fundamental understanding of what the business is about, and Vanessa has referred to that just now, particularly on the more complex matters. We go in depth and try to understand. It would be wrong of us to issue a policy without that understanding. That would create a problem when the policy comes to fulfillment.
Yes.
When the claim comes along that requires that fulfillment, we think we approach things very differently. That is with support and empathy. We don't sit apart on the opposite side of the desk from the customer. We need to sit on the same side of the desk with the customer. That is something that we go out of our way to do. Another element that sets us apart is our approach to contract language. It is very plain language, and I think we're well known in the market as very different policy wording, structure, and language. It is very plain language. It also is about our culture and how we go out of our way to pay a claim. We don't find reasons not to pay a claim. It is an important part of our culture. And finally, we embed all of this into our policy wording. We say how we're going to deal with claims, and we tell the customer that in the event of a problem, we will defend them from Rand 1 up. They only pay the excess or deductible in the event they're liable. That's what sets us apart.
So I like story time, and I like hearing stories. I've heard some water cooler conversation about a claim involving a shipping vessel and a hurricane. Tell us more about that and how the Leopard team facilitated that particular process.
Yeah, it was much more than a water cooler. So in this case, it involved an insurance broker and his PI, his responsibility to his customer. Now, in the space of marine insurance, you can buy a policy that covers your boat.
Yes.
But there are some rules around it. And one of the rules, especially in hurricane season, is you can't just wander into hurricane areas without special attention. And there are clauses in the policy that, in a marine policy, that deals with that. If you wander into a space where there is hurricane activity, there is no cover unless you have communicated it very carefully beforehand.
Yeah.
In this instance, the insurance broker ultimately was found to have failed in his duty of care to the customer to communicate clearly the marine cover parameters and the requirements for certain elements of compliance. As a result, the broker was finally found liable, and we ended up paying quite a large claim to resolve that matter. That's what that was about.
Oh, I can just imagine how many coffees that cost you.
I drink a lot of coffee anyway, so an extra few cups of coffee was fine. But it wasn't the coffee; it was the rands that went out of pockets to pay for the claim.
So, Vanessa,
Yes.
we've been told you enjoy the non-standard or challenging risks that demand an out-of-the-box approach and way of thinking. Now, we've heard about the tale of the shipping vessel and the hurricane, but what are some of the challenging risks you've needed to deal with without, of course, compromising any clients?
So without actually naming any clients, I think I'd like to focus more on the challenging aspect of some of the bigger risks. So on the larger, more complex risks, they lend themselves to non-standard, more flexible structured policies. This is especially where high limits are required, where there are multiple insured parties on the policy, and where the insured has a global footprint. And it often requires a flexible and more creative structure taking into all facets, taking into account all facets of the risk. So generally, PI tends to be volume-driven business, and I often use the analogy that it can often become like a conveyor belt where you're just putting lids on bottles. But I think when you are scrutinizing the larger, more complex risks and you have more time to do that, you're actually analyzing what is in the jar in each instance, and ensuring that you understand the exposure completely, that you are advising and supporting the broker appropriately in those instances.
So, how does the Leopard team go about ensuring a bespoke insurance solution to mitigate diverse risks?
So as Steve mentioned, our policy is written in plain language. It's a legal liability policy, and by its very structure, it allows us flexibility in dealing with diverse risks. So whilst certain components of the policy are standard, we will, if required, adapt and modify certain aspects via endorsement, and in certain instances, pen tailored policies, which Steve is quite adept at, to ensure that our solutions are quite client-specific and customized where required.
So, as we close from both of you, perhaps, what are some of the lessons learned along the way in this sector, and maybe some top tips for clients who need this type of insurance but don't know it yet?
Vanessa and I have had conversations about this many times. For me, in the present economic environment and inflation moving upwards, it is critical for customers for the insureds to review the level of cover they buy. And it's amazing to me how often people look at the rands and cents and they take a very low deductible, quite a low limit. And sometimes it's almost pointless. As I mentioned, inflation, they should be buying as much cover as possible and taking as high a deductible as possible. The reason for it is that PI is about catastrophe. If something goes horribly wrong, it's there for catastrophe. There's no point in buying 5 million cover with a 50,000 Rand deductible when you've got a 20 million Rand claim. Rather buy a 20 million Rand level of cover and a 500,000 Rand deductible. The deductible won't kill you, won't put you out of business, but a claim that exceeds your limit, and you're dead. You're dead. It doesn't make sense. So I would, in terms of a top tip, I'd say review those limits. These days, probably 5 million would be absolute minimum for the small guys, and upwards from that, depending on your own customers' exposures. And inflation is an issue. If I reach out into one particular sector, and that's the insurance brokers. Insurance brokers are horribly exposed right now to the inflationary content of a claim where they're dealing with their customers in business interruption, loss of profits, and time taken to fix things up. The Sasria claims recently proved that in the floods in KZN. The time taken to get the stuff back to the customer to fix their problem is much longer than people predicted. That's a message for brokers, though.
I think that's a good real world example.
It is.
Vanessa?
Yes, so I would really have two that I'd like to focus on. Firstly, for brokers to engage with their clients and to really understand what it is they do. And often that will require a face-to-face meeting. Completing a proposal form and sending it in and expecting a quote is not really understanding your client. You need to engage with them. And in addition, I feel that brokers should engage with insurers much earlier, especially on the larger corporate risks, capacity in the market has shrunk dramatically over the last 3 years, and that requires looking at risks well in advance of renewal to ensure that you can put together the best possible programs for your clients.
You know, what Vanessa was just saying now is pretty key. That understanding by the broker of their customer,
Yes.
the accountant, the engineer, whoever that may be, that component fills that expectation gap between what the customer think they're getting and what the policy actually does. That information that Vanessa was talking about was so important.
It's very important, and I often speak to brokers and ask them that question: Do you know what your client does? And quite often they say, I don't really understand what they do. And I think therein lies the problem.
That is scary.
Yes. So I think brokers actually need to engage with their clients and have a conversation and try and understand what it is they do and where their exposures lie. And often it is asking a very simple question: if something had to go wrong, what would go wrong, and what would the potential fallout be? So those are just very simple questions that you can ask your client to try and ascertain where the exposures lie.
Thank you for listening to this episode of Insuring Trust with Leopard. To listen to previous and upcoming episodes, check out the social media channels on YouTube, LinkedIn, Instagram, and Facebook under Leppard Underwriting, and on Twitter at Leppard_writing. To find out more about Leopard products or to get support as a broker, visit leppard.co.za. Till we meet again, make sure your reputation is protected.